Hello and welcome to this new Monday report from Bourdieu. Despite the shutdown of the US administration, the inflation figures were still able to be published and came in below expectations, as you can see on the graph to the right here. Core inflation is back to 3% year-on-year compared to the expected 3.1%. At the same time, the US and European PMI indices for the month of October are generally up and better than expected. Specifically, they are at 55.2 for services and 52.2 for manufacturing in the United States, as you can see on the left. Contained US inflation and positive leading indicators made for an ideal cocktail for risk assets last week. Stocks are generally up by 2%. The short-term victim, of course, is gold, which fell by 2.9% over the week, but is still up 55% since the start of the year and whose fundamental drivers remain unchanged in our view. Finally, oil rebounded by nearly 8% following the announcement of new sanctions against Russia. However, we believe that the market will remain in surplus over a one-year horizon. The weekend announcements of progress in trade, talks between China and the United States, along with the more than likely rate cut by the US Federal Reserve on Wednesday, should continue to support equities. If third-quarter earnings reports continue their current trend, which is positive for now, the key point to watch in particular will be the statements from the big American tech companies regarding their investments in artificial intelligence. 5 of the 7 big tech companies will be releasing their figures this week. In our portfolios, we are revisiting Salesforce, which has fallen behind, as you can see on the chart, compared to the US tech sector, which has been boosted by AI infrastructure and semiconductor stocks. But we are expecting a more pronounced return to growth for this software publisher, with the growing strength of its strategy, which is precisely based on AI agents. That's all for today. Thank you for your attention and see you next week.